In recent weeks, the stability of the global oil market has become one of the most urgent questions in policy circles and financial communities. What was once considered a dependable cornerstone of the international economy is showing signs of strain. According to our sources, discussions are no longer limited to price fluctuations or temporary supply disruptions. Instead, analysts are speaking openly of a structural crisis, one that could reshape how Western economies function for years to come. Behind closed doors, officials acknowledge that the volatility now unfolding is not a passing storm, but a deeper shift in the balance of global energy. Observers point out that oil has long served as both an economic driver and a political instrument. For decades, the West relied on stable access to affordable supplies, ensuring growth and security. Today, however, this assumption is being challenged on multiple fronts. Producers are recalibrating their strategies, geopolitical rivalries are intensifying, and environmental policies are accelerating the transition away from fossil fuels. In expert circles, it is cautiously noted that these forces are converging at once, creating what some describe as a perfect storm. The result is not just rising prices at the pump, but growing uncertainty about the future of the entire system. Signs of this transformation are already visible in Western economies. Supply disruptions have pushed prices upward, while investment in traditional oil infrastructure has slowed significantly. Policymakers face the delicate task of balancing immediate energy needs with long-term commitments to sustainability. Official statements emphasize resilience and transition, but industry insiders quietly admit that governments are struggling to reconcile these competing priorities. The gap between ambitious climate targets and the practical realities of securing energy has never been so evident. For ordinary citizens, the consequences are tangible. Rising fuel costs affect not only transportation, but also the price of goods, as logistics and production costs climb. Households face increasing pressure as heating, electricity, and fuel bills absorb a larger share of income. Experts warn that this pressure could translate into broader social discontent, particularly in countries where energy inflation compounds existing economic difficulties. In financial circles, cautious voices suggest that the oil crisis could become a catalyst for political instability across parts of the Western world. Behind the official narrative of resilience lies a more complex story. According to insiders, Western governments are exploring alternative supply routes and negotiating with producers once considered unreliable partners. These moves highlight the urgency of the situation. The same officials who only recently spoke confidently of energy independence are now forced to seek new compromises. Analysts describe this as a reversal of long-standing assumptions. The West, once at the center of global energy security, now finds itself reacting to shifts it cannot fully control. At the same time, major producers are asserting their influence more decisively. By adjusting production levels or redirecting exports, they demonstrate the leverage they hold over consuming nations. This dynamic, analysts caution, is not new. But in the current environment of heightened geopolitical tension, its impact is magnified. The West's reliance on external suppliers, once seen as manageable, now looks increasingly like a vulnerability. The cumulative effect is a growing sense of fragility. Markets respond nervously to even minor disruptions, while long-term forecasts diverge sharply depending on assumptions about production, demand, and policy. Some experts speak of a fundamental realignment in which oil ceases to play the stabilizing role it once did. Instead, it becomes a source of recurring crises that shape economic and political landscapes. Subscribe to the channel to stay ahead of these developments and understand the forces that may redefine the future of global energy. When examining the unfolding oil crisis, analysts often begin with structural weaknesses that have been building for years. According to our sources, Western economies are experiencing the consequences of long-term underinvestment in traditional energy production. For more than a decade, capital has increasingly shifted toward renewables, driven by environmental policies and public demand. While this transition reflects a global commitment to sustainability, insiders caution that it has left critical gaps in supply capacity. The infrastructure that once ensured steady flows of oil is aging, while investment in new projects lags behind demand. Observers note that the imbalance between declining supply and persistent consumption is now being exposed. Even as renewable energy capacity grows, it cannot yet fully replace the scale and reliability of oil. In expert circles, it is carefully observed that policymakers underestimated the challenges of this transition. Official rhetoric emphasized smooth adaptation, but the practical reality is more turbulent. A system designed for gradual change is now confronting abrupt shocks, leaving Western economies vulnerable to external disruptions. Geopolitical tensions amplify these vulnerabilities. Recent disputes over production quotas, sanctions targeting energy exporting countries, and conflicts in key regions have tightened the market. Each of these developments might once have been absorbed without significant disruption. Today, however, with thinner margins of supply, even small shifts create disproportionate effects. Analysts stress that the oil market has become hypersensitive, reacting strongly to rumors, policy announcements, or localized incidents. Volatility has replaced stability as the defining feature of the sector. For financial markets, this volatility poses serious risks. Oil has long served as a benchmark for broader economic health. When prices swing unpredictably, they undermine confidence across industries, from airlines and shipping to manufacturing and agriculture. Investors face a dilemma: whether to continue supporting fossil fuel projects despite long-term climate concerns, or to accelerate the pivot to renewables while acknowledging the near-term energy gap. According to insiders, this uncertainty is creating hesitation, reducing the flow of investment in both directions. The result is a landscape where neither traditional oil nor renewables fully meet the demands of the moment. Meanwhile, citizens in Western nations experience the crisis in daily life. Rising fuel costs contribute to inflation, eroding purchasing power. For households already strained by higher food and housing expenses, the additional burden of energy inflation deepens economic anxiety. Social researchers warn that such pressures may manifest politically, fueling polarization and protests. Leaders who once framed energy transition as a collective opportunity now face the challenge of defending policies perceived as contributors to current hardships. Industry insiders quietly remark on another paradox. The very measures intended to strengthen resilience may be contributing to fragility. Strategic reserves, for instance, can provide short-term relief when released, but they are finite and cannot address structural deficits. Diversification of suppliers reduces dependence on any single region, yet global demand remains interconnected, meaning disruptions still ripple across borders. Analysts stress that while these tools buy time, they do not resolve the underlying imbalance between supply, demand, and policy ambitions. At the same time, producers outside the West are recalibrating their positions. By maintaining discipline in production levels and exploring new alliances, they enhance their leverage over importing nations. According to our sources, such moves reflect a clear recognition of the West's current vulnerability. Insiders describe this as a subtle shift in power. Consuming countries, once confident in their negotiating strength, now find themselves increasingly constrained in choices. The result is a growing sense that the Western oil crisis is not temporary, but systemic. It emerges from a combination of underinvestment, policy miscalculations, and geopolitical rivalries. Analysts caution that unless structural adjustments are made, periods of volatility may become the norm rather than the exception. Within policy circles, the debate has shifted from whether the West is facing an oil crisis to how severe and long-lasting it will become. According to our sources, governments are quietly reassessing assumptions that shaped energy strategies for decades. The belief that market forces and technological innovation would ensure stable supplies is now under strain. Instead, officials are forced to contemplate scenarios of prolonged scarcity, recurring price shocks, and deepening reliance on external suppliers. Analysts point out that the energy transition, though essential in the long term, is creating vulnerabilities in the short term. Renewable sources are expanding, but their intermittency and storage challenges prevent them from fully substituting oil at this stage. In expert discussions, it is cautiously acknowledged that the West may have advanced its climate commitments faster than its infrastructure could adapt. The result is a widening gap between policy goals and practical realities. Citizens are told that the future lies in green energy, yet their immediate experience is rising costs and declining stability. Industry insiders note that these contradictions fuel tensions between governments and the public. Leaders emphasize resilience and innovation, but households see higher fuel bills and more expensive goods. For many citizens, the promise of a sustainable future feels distant compared to the everyday pressure of energy inflation. Observers warn that this perception gap risks undermining public trust in energy policy as a whole. The political implications are profound. Energy insecurity can reshape electoral dynamics, strengthen populist movements, and intensify divisions within societies. Financial analysts add that the oil crisis is reshaping investment patterns. Traditional energy projects, once reliable investments, now carry heightened risks of political backlash and environmental regulation. At the same time, renewable ventures are struggling to attract sufficient capital amid doubts about scalability and profitability. This uncertainty reduces overall investment flows, leaving both sectors underfunded. Experts describe the situation as a dangerous stalemate, where hesitation prevents decisive progress in either direction. Meanwhile, producers outside the Western Bloc recognize their enhanced leverage. By carefully adjusting production, forming new alliances, and redirecting exports, they exert influence over global prices. According to insiders, this shift is not accidental, but deliberate. Producers understand that Western economies, already constrained by policy commitments and underinvestment, have limited options for response. This dynamic creates what analysts describe as a reversal of power. Consuming nations that once dictated terms now find themselves reacting to the strategies of suppliers. Observers also underline the psychological dimension of the crisis. Oil has long been associated with stability, a dependable resource underpinning growth. Its transformation into a source of volatility erodes confidence not only in energy markets, but in broader economic systems. When citizens, investors, and governments begin to view energy as unreliable, the ripple effects spread across industries and institutions. The perception of fragility can, in itself, magnify instability. In this environment, awareness becomes critical. Understanding the forces reshaping oil markets is not only a matter for specialists, but for anyone affected by rising costs and economic uncertainty. Subscribe to the channel to stay informed about the hidden dynamics driving the crisis and to follow how shifts in energy are reshaping the political and financial future of the Western world. According to our sources, the oil crisis is forcing Western policymakers to confront questions that were once considered distant scenarios. Officials who previously spoke of smooth transitions toward renewable energy are now openly acknowledging short-term vulnerabilities. Behind closed doors, discussions focus on whether existing strategies can withstand prolonged instability or whether deeper structural adjustments are necessary. Analysts stress that the answers remain uncertain, but the urgency of these conversations reflects the scale of the challenge. Observers highlight that the geopolitical environment is amplifying these pressures. Sanctions, trade disputes, and conflicts in key production regions have tightened supplies further. What might have been manageable disruptions in earlier decades now escalate into systemic shocks. With reduced investment in oil production and limited capacity for immediate substitution, Western economies have little buffer against volatility. Insiders note that even relatively minor events, pipeline accidents, political unrest, or policy announcements, can trigger significant price movements. This heightened sensitivity affects financial markets worldwide. Traders increasingly operate in an environment where long-term forecasts are unreliable and short-term signals dominate decision-making. Volatility, once seen as a temporary phenomenon, is becoming a permanent feature. Analysts warn that this undermines confidence, discourages investment, and complicates planning for industries that depend on stable energy costs. In such conditions, economic resilience weakens, and uncertainty spreads across sectors far removed from energy itself. Social consequences are equally visible. Rising fuel and heating costs weigh heavily on households, especially in lower and middle-income groups. Protests against high energy bills have already erupted in several countries, highlighting the political risks of prolonged instability. Governments attempt to soften the impact through subsidies and relief programs, but insiders caution that these measures strain budgets already burdened by inflation and debt. In expert circles, it is quietly observed that policymakers face a dilemma, whether to prioritize short-term social stability or maintain commitments to long-term energy goals. Meanwhile, producers outside the Western Bloc are capitalizing on these dynamics. By coordinating production adjustments, forming new partnerships, and expanding influence in emerging markets, they reinforce their position. Analysts describe this as a rebalancing of global energy power, with consuming nations losing leverage while exporters gain. The shift is particularly pronounced because Western countries, constrained by environmental targets and political pressures, lack the flexibility to respond aggressively. Insiders suggest that this imbalance may persist for years, reshaping not only markets, but also alliances. Cultural implications should not be overlooked. For decades, cheap and reliable energy underpinned the Western lifestyle, from suburban mobility to industrial productivity. As costs rise and availability becomes uncertain, citizens are forced to adjust expectations. Observers speak of a psychological turning point. Energy abundance, once taken for granted, is no longer assured. This realization may influence consumer behavior, urban planning, and even generational outlooks. Experts warn that such shifts in perception can be as transformative as the material disruptions themselves. At the international level, tensions are visible in forums where energy policy is debated. While leaders publicly reaffirm commitments to sustainability, insiders acknowledge that private discussions reveal growing unease. Some argue for slowing the transition to renewables, in order to stabilize supplies, while others insist that doubling down on green energy is the only way to escape dependence on volatile oil markets. The lack of consensus highlights the strategic crossroads at which the West now stands. Taken together, these dynamics suggest that the oil crisis is not merely a temporary disturbance, but a sign of deeper structural fractures. It reveals the limits of current strategies and the risks of underestimating the complexities of transition. Analysts caution that unless a coherent path forward is established, instability will remain the defining feature of the Western energy landscape. Experts emphasize that the coming years will determine whether the West can regain stability in energy markets or whether volatility becomes a permanent feature of the global economy. According to our sources, governments are quietly weighing three strategic options. The first is to maintain current climate commitments while accepting the risks of continued instability. The second is to slow the transition, directing more investment toward traditional oil infrastructure. The third is to pursue a hybrid path, balancing renewables with limited expansion of fossil fuel production. Each path carries costs, and none guarantees security. Industry insiders warn that indecision itself may be the greatest risk. By hesitating between competing strategies, Western governments risk underfunding both oil and renewable sectors. This leaves markets vulnerable to shocks and undermines investor confidence. Analysts describe this as a structural paralysis, where the urgency of short-term pressures collides with the demands of long-term planning. In this environment, even well-intentioned policies can create unintended consequences. The geopolitical implications are profound. Producers outside the West continue to consolidate power, using their control over supply as leverage in broader political disputes. Western nations, traditionally seen as energy leaders, now find themselves dependent on negotiations with actors they cannot fully influence. This shift, observers note, alters the balance of power not only in energy markets, but in international relations more broadly. The oil crisis, in this sense, is not simply an economic issue, but a geopolitical turning point. For citizens, the impact remains immediate and personal. Rising prices at the pump, higher heating bills, and costlier goods remind households daily of the fragility of energy systems. Social researchers warn that if instability persists, frustration may translate into political upheaval. Populist movements gain traction when people perceive that elites cannot secure basic needs. Energy, once a technical policy area, is increasingly becoming a central arena of political conflict. At the cultural level, the crisis is reshaping how societies imagine the future. The post-war era of cheap, reliable oil underpinned Western prosperity for generations. Its erosion challenges deeply rooted assumptions about growth, mobility, and comfort. Observers describe this as a psychological rupture, the realization that energy abundance cannot be guaranteed. Such shifts, they argue, could redefine lifestyles, consumption patterns, and even generational attitudes toward progress. International organizations warn that without coordinated efforts, fragmentation will intensify. Each state's attempt to secure its own supply risks deepening global competition and eroding trust. Analysts stress that cooperation remains possible, but requires difficult compromises between environmental goals, economic needs, and geopolitical realities. Whether such compromises can be achieved will determine the shape of the next energy era. What becomes increasingly clear is that the oil crisis is not a passing challenge, but a structural transformation. It signals the end of an era defined by abundance and stability, and the emergence of a new phase marked by uncertainty and competition. For policymakers, businesses, and citizens alike, the ability to adapt will be crucial. For the West, the stakes could not be higher. Energy security will define not only economic strength, but also political cohesion and social resilience in the years to come. The forces reshaping the oil market are complex and often hidden from public view. Following them closely is essential for anyone seeking to understand where the world is heading. Subscribe to the channel to stay informed about the deep shifts in global energy and to see how today's oil crisis may redefine the economic and political order of tomorrow.